With us now for more is JC Punongbayan, the assistant professor at UP School of Economics. Good to see you again, JC. Welcome back to the program.
Thanks for having me again, Kathy.
Okay, so since Q3 GDP came out last week, there have been more data that have been released. Our FDIs are down. BAR expecting lower tax collections in Q4 because of the flood fund fiasco. So could we see far lower GDP results in the current and coming quarters?
Well, this is already very disappointing in the sense that if you don't count the pandemic, this is already the lowest quarterly GDP growth rate since 2011. In fact, this is the first time in a long while that the contribution of investment spending has been negative. So that really speaks to some of the problems when it comes to investment spending, specifically government construction. When I got to parse the data actually coming from the Philippine Statistics Authority, and the biggest decline in investment spending came from that, the decline in the contribution of government construction. Of course, different agencies, especially the DPWH, are now more cautious in terms of spending on public works. There seems to be a trade-off between high infrastructure spending but corruption-ridden on the one hand, and then we already saw many years before during the Aquino administration that they were very cautious about infrastructure spending. However, that led to rather slow growth. So hopefully one day we can see a time when we have fast growth of infrastructure spending, but also not ridden with corruption.
So when's that one day, JC? Because right now that kind of caution is translating into some sort of a paralysis, which leads us to think that the 5.5% to 6.5% forecast range is unachievable for this year.
Exactly. We might see a situation as well where the economic managers might again downgrade or reduce the target, which they already reduced it from 6 to 8%. If you remember the first State of the Nation address of President Marcos, he wanted 6 to 8% for this year. But fast forward to this year, it's down to 5.5% at least. But even that is seemingly impossible already. We need 7% growth for the last quarter of this year, which is all but impossible. So there needs to be an overhaul in the way we do our public works because this is not really sustainable.
So where are you benchmarking now the potential forecast range for the GDP this year, and how are we going to compare with our ASEAN neighbors?
Well, at the same time that we're seeing a slowdown of Philippine GDP growth, Vietnam is growing very robustly. And in fact, latest data show, I was able to parse one of the best comparisons of incomes across different countries. Vietnam already overtook us in terms of GDP per capita. And in fact, Vietnam is already higher than Indonesia using the latest statistics. So the contrast is really quite stark between the Philippines and Vietnam. And unless we're able to fix governance in the Philippines, boost investor confidence. And by the way, you mentioned earlier, foreign direct investments have gone down significantly. If you look at the annual data, it's quite high, but it's stagnated. It's not increasing as much as the Marcos administration wants. There seems to be malaise in the Philippine economy, and we need to fix this as soon as possible.
And that malaise is showing up in the Philippine peso. It's fallen to a fresh all-time low 24 hours ago. We're seeing a bit of a recovery, but still at 59 to the dollar. What are the implications in both growth and inflation?
Well, the interesting thing here is that Governor Eli Remolona of the Bangko Sentral ng Pilipinas is a lot more willing for us to cross the threshold of 60 pesos per US dollar and allowing the market to really determine the correct, quote-unquote, correct level for the Philippine peso US dollar exchange rate. This is in contrast to the stance of former BSP Governor Ben Jokno, who allowed the selling of international reserves of dollars in the market in order to defend the peso in that way. But now even the BSP is acknowledging the possible role of the corruption scandal affecting investor confidence. This is really a symptom of what's really going on in the Philippine economy. It's a good reflection, actually, of what's happening rather than a cause of major problems. I don't think that inflation will be affected too much, even if we cross the 60 pesos per US dollar threshold. So yeah, it's more of a symptom rather than a source of our problems.
But it is a show of disappointment among foreign investors. If the peso continues to fall, there's that political risk premium that people have to think of. The palace is now thinking and also saying that the AFP is verifying the list of alleged destabilizers against the Marcos administration. What sort of an impact do you think this continued escalation in political risk having on the way people want to invest their money in Asia and how they're considering or not considering the Philippines?
Oh yes, it's in the middle of November. Many political things will still be happening. For example, the upcoming protests, the INC protests, the massive protests there, and then also near the end of this month, and also the budget, which will be railroaded possibly up until December, and then we expect as well the ICC to to take certain steps, and so many things politically will still be happening, and investors are definitely on the lookout. So I expect if things continue as is, we might be finally crossing that 60 peso threshold if the BSP does nothing to defend, quote unquote, defend the peso.
We have a final minute here, a reenacted budget. Is that a possibility in 2026? And what are the implications?
Well, it remains to be seen because the Senate made certain pronouncements that they, for example, want to remove the unprogrammed funds in the budget. But I doubt very much that they will be able to do much on that front. So I expect that they will be able to finish the budget for this year. However, we expect it to be pork-ridden as well. We're not expecting too much by way of reforms this year.
All right, we'll leave it at that. Thank you so much for the update. JC Punongbayan of the UP School of Economics.